Hello everyone. Welcome to IVT 101. In today's video I'm going to be talking about different ways of how to invest in the stock market. So, sit back and let's begin. Tip 1. Determine your goals, make a plan. Before you get into investing of any kind, you first have to make sure that your overall financial situation is in a position to accommodate the new activity. Your financial baggage includes everything from income to debt, to your household budget. Tip 2. Put some money to the side. Use a small amount of money uniquely for investing and make sure you are not going to need it soon. Before you put any of your money at risk, you should first have some put away that will not be subject to any risk whatsoever. A cash reserve equal to at least 3 months' living expenses should be the minimum, and it should sit in nothing riskier than certificates of deposit or money market accounts. Tip 3. Open a brokerage account. Choose one that suits you best. There are many ways to invest. Here I will mention several common and safe ways to start investing. Open a 401k investing plan or 403(b). Let's define what the 401k is. A 401k plan is a tax-advantaged, defined contribution retirement account offered by many employers to their employees. It is named after a section of the U.S. Internal Revenue Code. Workers can make contributions to their 401k accounts through automatic payroll withholding, and their employers can match some or all of those contributions. The investment earnings in a traditional 401k plan are not taxed until the employee withdraws that money, typically after retirement. In a Roth 401k plan, withdrawals can be tax-free. And now, let's define what the 403(b) is. A 403(b) plan is a retirement account for certain employees of public schools and tax-exempt organizations. Participants include teachers, school administrators, professors, government employees, nurses, doctors, and librarians. The 403(b) plan is in many ways similar to its better-known cousin, the 401k plan. Each offers employees a tax-advantaged way to save for retirement, but investment choices are often more limited in a 403(b), and 401ks serve private sector employees. And now let's talk about the IRA. What is an IRA? An IRA is an account set up at a financial institution that allows an individual to save for retirement with tax-free growth or on a tax-deferred basis. The three main types of IRAs each have different advantages. Traditional IRA, you make contributions with money you may be able to deduct on your tax return, and any earnings can potentially grow tax-deferred until you withdraw them in retirement. Many retirees find themselves in a lower tax bracket than they were in pre-retirement, so the tax deferral means the money may be taxed at a lower rate. Roth IRA, you make contributions with money you've already paid taxes on after tax, and your money may potentially grow tax-free, with tax-free withdrawals in retirement, provided that certain conditions are met. Rollover IRA, you contribute money rolled over from a qualified retirement plan into this traditional IRA. Rollovers involve moving eligible assets from an employer-sponsored plan, such as a 401k or 403(b), into an IRA. And now let's talk about the stock market. What is the stock market? The term, stock market, often refers to one of the major stock market indexes, such as the Dow Jones Industrial Average or the S&P 500. Because it's hard to track every single stock, these indexes include a section of the stock market and their performance is viewed as representative of the entire market. You might see a news headline that says the stock market has moved lower, or that the stock market closed up or down for the day. Most often, this means stock market indexes have moved up or down, meaning the stocks within the index have either gained or lost value as a whole. Investors who buy and sell stocks hope to turn a profit through this movement in stock prices. Tip 4. Start investing with a low-cost online service. Once you have a retirement account up and running, it's time to start investing for your non-retirement investing needs. Use a robo-advisor. If you're not the type of person who wants to do it yourself, their investment accounts, you might be happy using a robo-advisor. Robo-advisors use algorithms to help create the ideal portfolio mix for your needs and risk tolerance, usually by investing in exchange-traded funds, ETFs. Usually, you don't get to pick and choose individual stocks or funds. The robo-advisor does it all for you. You can truly set it and forget it. Tip 5. Use an online stock broker. Do it yourself. As opposed to hands-off robo-advisors, online stock brokers let you do the trading yourself. That means researching, choosing, buying and selling stocks, options, funds, etc., on your own. Tip 6. Get investment education. Educate yourself. When we talk about investing, we are talking about a serious business where your money is at risk. It does not matter if you are going to put your finances in the hands of an expert. It is very important to educate yourself first in the field and understand both sides of the coin. It is very important to educate yourself to prevent unnecessary risks. Remember, it is your money and you must invest it wisely. And now let's talk about my last tip. Tip 7. Don't forget to diversify your portfolio. And now let's talk about diversifying your portfolios. The reason why it is important to diversify is because it will help you create long-term profits, and even more so if one of your shares falls. When diversifying, you have the advantage that you have a diverse portfolio, which means that your other actions will help you keep a balance. Have you ever heard the phrase that says never put your eggs in the same basket? Well, this is what it means. Diversifying will help you have a balanced investment portfolio. And now that you already know several ways of how you can invest, take action and start investing. Remember, the steps you take today will be the ones that define your future and the future of your family. So if you are interested, go to a financial advisor, do your own research, educate yourself and start investing for a better tomorrow. Well friends, this was all for today's episode. If you liked this video, press like, consider subscribing and clicking on the notification bell so that you will be the first to receive my future videos. Thank you very much. Stay safe, blessings, and see you next time.